Welcome back. It's 100 points, so holding for now. The rupee is not holding though. That's at about 95.80. Vaibhav Sanghavi is with us. He's CEO Ask Hedge Solutions. Vaibhav, good afternoon. The macro overlay is a little tough, but I mean, markets are finding their own thing to do. This stock, that stock, lots of action, lots of action. What are you doing? Just give us a sense of, are you letting the macros bother you? Or unfazed?
So Prashant, I mean, a good question, but at any given point in time, you will never be able to ignore completely the macros, right? So, what's happening from a geopolitical standpoint? What's happening in terms of the actions which is being kind of proposed or probably will be taken here as well? My sense is basically we are moving towards probably if this is situation continues, then probably to a marginally higher inflation environment, and thereby leading to interest rates probably either staying neutral or probably moving higher a bit. So the scenario is probably changing. Again, this is all binary. If kind of things settle down, you are looking at a completely different situation, but which makes it even more difficult to see how to kind of position your portfolios generally during these times where the outcome can really take it to either ways by a good margin.
Hi Vaibhav, good to see you in. Vaibhav, the Indian rupee, I mean, that's clearly the problem pocket, right? At least with regard to sentiment and flows as well. Difficult to imagine flows coming in when you see the Indian rupee that was 89 odd, say 6 months ago, moving to around 96. What's your view on it? I mean, stability is called for. Select sectors, obviously, they are going to gain. Imports will not come in, etc. That's a decent argument. And from an economic perspective, maybe you'll argue it's not so bad. But it requires flows to come back. Your view?
So I think you're right. I think, in our conversations with investors from global standpoint, this has been a worry, at least for some period of time. But probably, the other way to look at it is that imagine a scenario where things kind of stabilize and you see normal resumption of supply chains. Maybe then rupee, to be very honest, at what these levels are to be very honest, a good level to probably bring in money as well. So one can have arguments on both the sides, but from a temporary shorter term perspective, I think it's very difficult to call where things are headed. In the medium term, everybody knows that things are going to settle and probably, you will see from some recovery happening. So it's just your time period of your, of your investments you are looking for, and probably you will have to take a call on the underlying variables.
Yeah. So give us a sense, Vaibhav, of what you've been doing.
See, from a portfolio standpoint, I think we are neutralish purely because, as I mentioned, looking at the binary nature in terms of the events which can pan out, it's very difficult to take an exposure either ways. So that's one side from a net delta exposure. But what is more encouraging from a market standpoint is basically if you see from a quarterly results perspective, I think the broader market quarterly numbers have been pretty decent. Not only the quarterly numbers have been pretty decent, but also the subsequent commentaries from the management, I think gives a lot of confidence in what we are probably seeing from an earnings standpoint. The difficulty in probably macros may eventually catch up to the earnings probably 6 to 9 months later. But at this point in time, as we say, or as we see things, we do not see a very big risk to the estimates depending upon or probably relying on what the commentary has been. So I think you are getting a lot of bottom-up stories probably, and that is why you see the broader market strength. But from an overall net perspective, we are pretty neutralish.
Okay, all right. Vaibhav, we have to talk about some sectors and some themes that you like. So name the top 2 themes with good rationale.
So I think we've been consistent in our themes where we continue to like the whole data center opportunity. Now, when I talk about data center opportunity, the supply chain which leads to that data center, meaning right from chillers, cooling equipment, switch gears, transformers, diesel gensets, and probably utilities as well. the whole spectrum of anything to do with data center is something we like, purely on the basis that if we are to scale up from 1.5 gigawatts to probably 10 to 12 gigawatts within 4 to 5 years, there's massive amount of capex which will kind of happen in this space. So that's something which we like. In addition to that, I think we are also bullish on the CDMO players, within the pharma universe, along with diagnostics as well. So that's something to, again, look for from a sectoral perspective. Lastly, from banking and financial, while the valuations may be pretty attractive, especially on the banking side, my sense is basically we will have to wait, on two occasions: one from an FPI's flow, and two on the interest rate movements, which will determine, what is the configuration which will likely to be within the whole banking and financial space. So that's something which we are at this point in time waiting and watching for.
Vaibhav, we'll leave it there. Thank you very much for joining us and running us through what you make of things. Look at what's happening to the market, right?